Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the bull-bear point and figure market breadth summary chart for July 8th, 2018. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.92 rose from 0.82 last week, advancing, but still within bearish territory. The total count of securities in bullish or bearish patterns decreased 3% to 2,913. The count of bearish stocks decreased 8%, while the count of stocks in bullish patterns increased 4%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 2 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Sand to Pearls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided, and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 9 points for the third decline in 4 weeks. At a positive 291.86 points, it continues below the January 2018, the February 2017, December 2016, July 2016, and the May 2016 tops. It continues above the March 2018 and July 2017 tops above plus 100 in the last 30 months, and it continues above all 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. The CCI 20 daily at a positive 16.58 is up from a negative 110.75 last week. At Monday, 7/2 close, the CCI 20 daily had 6 consecutive days below zero for a change of trend to Woody's down. The CCI 20 daily is now within the plus or minus 50 range for a zero line reject short entry signal if the CCI 20 daily should fall early next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 114 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly rose to 88.92 from 68.44 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: REITs, some tech, and gold and silver on top. KBW Bank, brokers, and some tech on the bottom. Bullish: REITs continues in the top 5. Networkers has entered the top 5. Computer hardware has left the bottom 5. Oil and oil services have left the top 5. Bearish, semis, disk drives, and brokers continue in the bottom 5. KBW Bank has entered the bottom 5. Gold and silver has entered the top 5. Focus this week from www.zerohedge.com. It's time to get defensive. Morgan Stanley downgrades tech stocks to sell. The following are some key points. Last weekend, when discussing why the trade war with China has now lapsed into what it called a vicious cycle that can only end with a market drop, Morgan Stanley wrote that it expects further fallout from trade wars and warned that among the various ways traders can position for escalation is to ease on exposure to the tech sector, which it predicted, quote, is vulnerable as a sector where pricing has been insensitive to trade risks so far, close quotes. Now, in the latest note from Morgan Stanley's Michael Wilson, the chief equity strategist starts off by comparing the market with the recent volatility in the weather, writing that, quote, the summer moved into full swing this past week in the United States, with one of the steamiest July 4ths I can remember, close quotes, and resulting in, quote, pop-up thunderstorms that have been epic lately, dropping as much as 5 inches of rain in just 10 minutes near my house on Tuesday afternoon, close quotes. This reminds me of how markets have traded so far this year. Unannounced storms that do a lot of localized damage over a very short span, but end almost as quickly as they arrive. Extending the weather metaphor, Wilson then picks up on a trope he has been discussing all year, namely the idea of, quote, rolling bear markets, close quotes, in which one specific asset class is slammed even as the rest of the market remains surprisingly stable. For context, he brings up the vol shock in early February and the sharp sell-off in Italian BTPs in May, which, quote, stand out as perhaps the best examples of what investors have had to deal with this year, close quotes. Amazingly, neither of these events led to a broader, more systemic de-risking of portfolios. Instead, prices reset quickly in the affected assets, and investors simply moved to higher ground. Going back to the idea of a rolling bear market, Wilson describes it as feeling, quote, awful at times in specific places, but not everywhere at once, close quotes. Perhaps it's easiest to see when comparing regions, sectors, or specific stocks. In other words, the damage below the surface is much worse than if you simply look at the broad indices. However, the higher ground is getting scarcer, with few completely dry areas. Morgan Stanley warns that these rolling bear markets aren't over until they touch every last corner, quote, with the highest quality areas eventually taken out to the woodshed, close quotes, such as what happened during the 2014 through 16 rolling bear market, when emerging markets, high yield, and commodities bore the brunt of the pain. So what caused the last rolling bear market to end? Quote, it wasn't until a U.S. recession got priced in during early 2016 and hit the S&P 500 and the vaunted tech stocks that the bear market ended, close quotes. Wilson explains and adds that, quote, this time is no different, close quotes. Next, picking up on last week's report, Morgan Stanley warns that the bastions of safety in 2018 have remained the old stalwarts of this post-financial crisis bull market. Quote, the S&P 500 at the regional level and growth stocks at the sector and stock level, most notably U.S. tech stocks, close quotes. We commented on this last weekend when we showed that virtually all S&P gains in 2018 have been on the back of a handful of tech stocks. And as a result of a market which continues to ignore the potential spillover effects to asset classes that have been relatively isolated so far. Morgan Stanley unveils its first downgrade, small caps. With the dramatic 800 BP of outperformance in U.S. small caps versus large caps over the past 3 months, we are downgrading our view on U.S. small caps today from overweight to equal weight. But it's not just small caps that Wilson thinks, quote, will get wet, close quotes, to borrow from the weather metaphor, and as a result, he writes today that, quote, we are downgrading our view on the U.S. technology sector to underweight from equal weight, close quotes. That is, quote, sell, close quotes, for the following reason. While we are not worried about an economic recession as the catalyst for underperformance in these market leaders like it was back in early 2016, we do think that 2Q earnings season will bring inevitable acknowledgement from companies that trade tensions increase the risk to forward earnings estimates, even if managements don't formally lower the bar. Throw in the fact that these stocks have rarely, if ever, been so overloved and overowned, and the risk of a proper rainstorm in this zip code increases significantly. If a real tech sell-off were to kick in, one where corporations were unable to step in and repurchase their stocks, it is anyone's guess just where it will stop, which perhaps explains Wilson's skeptical conclusion, which prevented him from ending his note on a sugary high. Quote, let's not get ahead of ourselves, close quotes. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pirl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, this is Cindy Pirl, hoping that you have enjoyed a peaceful and pleasant Independence Week, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.